Music Studio.
My topic is financial literacy. Everyone is into man and it, but probably we have come from different backgrounds. Kuvira mwana chaya chaya chiri mudiki mwana anotopiwa makorokota otoiswa mari mumaoko handiti atointroducwa kumari, but there's not a time that that person mwana akazombogarwa naye pasi to say they are teaching that child about money, and probably coach nyari when I go to work money, and probably she was never coached about money. She was probably coached about what she's doing now. Aditi. So the basic definition, the financial literacy is the ability to understand and effectively use financial components and skills. Like budgeting, we also know about budgets. Maybe we use them or we don't use them. There's investing, you know how to invest, and it. Then borrowing, people borrow in various forms, whatever. Then there's taxation. And then there's personal financial management. So these are the components that she make up. When we are talking about financial literacy, you should understand these 5 things. And it. There's this quadrant. I think most of you have heard about this cash flow quadrant. Probably some of you don't have phones. This thing was coined by Robert Kiyosaki. And it. And maybe most of us are here. We are employees. You are still working somewhere. Aside hustle. And then some have moved from formal employment. You are now a self-employed. The difference between these two, this reports to your boss, and then this one is what? Your own boss. Your behavior between these two, but we are rooted, I'm the boss, which means everything. This is my money. But when you are an employee, when you sell marichi, they will come back. And then we have got this business owner. You have got a business, I think. But when you look at the characteristics of this cash flow quadrant, yes, probably can have one panapa or none. And I'm now a business owner. And then we've got this last one, an investor. So most of us, we are in the left side of the quadrant. And then we must be on the right side of the quadrant. Why I'm saying that? Because when you're an employee, the more you work, you are using time. 8 to 5 and eating. So over time, you're working 12 hours, you're getting more money because of what? Of overtime. Same with self-employed. You are doing the same thing. You have to be in the business. And the only time I wake up at 4, and end up shopping, those of Vanatel. You are everything. Then when you come to this business owner, we are saying this one is using people to make money. He's got employees. He can afford to go to a cruise ship and on holiday. He's got people back home or wherever the companies are who are running out. He's got set up my systems that can operate, that he can actually say, Mr. So-and-so is the accountant or the finance director. Send me a report. I want a report at the end of every day. How have done? And then he sees that report. It comes in a certain format. He explains and then I says, okay, this is what is happening. If suppose there's an emergency, you say, I need to cut short my vacation. But probably most of the times you won't. You just say, okay, do this A, B, C, D, A. Or you wait to talk to the directors at an AGM. Then an investor, when you are an investor here, you are using money. Your money is working for you. You use money to make money. You've got money, you are earning passive income. So you can add that. Probably you are an employee, you've made a lot of money. Who's this? Tim Cook, the CEO of Apple. Like the compensation that he gets, he can qualify to be, he can move from an employee, then he can actually invest in other businesses. And he starts earning income, whether by capital appreciation or dividends. He can move and cross here. And then even where we are here, we're self-employed. You have to go and you have your business grow. And you're starting to employ many people, structures. Because now Maimrewa is the finance director, is the marketing director, production, whatever, HR, she's doing it and it's. But as she just grows, she put someone in HR, in HR, in finance, in production. You are starting to have systems. And those systems are now working. Because the idea is to have systems that are working. Not so that even if that today an accountant or whoever suddenly says, I don't want a job, and then someone comes new, you will not feel it because there's a system that is working. So a business operates through systems that are structured, that you understand. People have got procedures, systems of how they do what, their duties and tasks and it. Right, I'm moving on to the. I hope you understand how this quadrant works, and then you need to be moving so that you become, money starts working for money. Currently we are what? Tukushandra Mari. We now need to have money work for us. There are 7 of them, types of income. There's earned income. Like when you are working for somebody, you get your salary, you are earning, that is earned income. And you see when you operate under earned income, when it comes to tax, you are the person who pays the highest tax. And I hope so many people don't, they say price but even you getting a salary increase, but you look at your net, it's like there's nothing has happened. I remember some years ago when I was still in full-time employment, a colleague of mine, he said, he was complaining, what is that increase, but I don't see the increase. Actually, my net is now becoming than before. So it's better that you obviously can increment the car. Why? It's because of the tax brackets that you are in. Because in Zimbabwe, you have got 0%, then from 0% you jump to 20%, 25%, up to 40%. So imagine you go into the next bracket, $10. We are from 0 and it's from $0 to $100, you pay nothing. But you are 20% increase, you have $120. Then it takes this 20%. If you calculate, you end up winning from our $90. So this type of income really, it's you are highly taxed in this income. Then the second one is the profit income, whereby saying that so people are saying that I do not anything, I sell anything, I did it. What $210 or $620, the profit I'm getting $10 I did it. You are now spending that profit. And as I just got profit, capital language, the good profit. So you are operating under what? Profit income. Then there's interest income. Interest income, you get it when you put your money whether in an investment, whether it's a savings account, or you've got bonds. These are type of products you invest. You are earning interest, probably it's coming per month, quarterly, or half year, or after every year. That is interest income. And this type of income, you see the rate of tax is lower. Usually, we're going to 15%, 20% at most. The government, I say, it always looks for opportunities to tax and just to give you into perspective, suppose you get interest of 3,000. Salary 3,000. Already, but once as an employee you are getting 3,000, which means you are already in the 40% tax bracket. But if you are getting your income, interest income of $3,000, you are going to be taxed 20%, and here we have a tax of 40%. You see the difference, right? Then dividend income, like when companies got shareholders, they've done profits. It's okay. Let's give back to our shareholders. But they declare dividend. This is dividend income. So it can be somebody who can be invested in so many companies. In different sectors. Then when those companies do well, they declare dividend. You get that income. And that income can be so meaningful that you can it becomes like passive income to you. Because what I know, you can declare dividend. You can $1 million. You can declare 200,000. You see, and that money can it will be taxed at a lower rate. Then there's rental income for people that are into properties. But Why there's so much crime in Zimbabwe, Pakanzi world tax? Do you know why? It's because most people, when they build houses or they buy properties, they want to put them, the chi, and their chi is for Nyarai what? You said what you said, by the way? Nyarai Gondo. Imba Nyarai Gondo. And it, they are Nyarai Gondo. Yes, it's status, it's about status. But what the rich do, when they buy all those things, they don't put them in their name. They put them under a company and it. Then when a company is now taxed, company they allow you to deduct my expenses. Okay, magata my innovations by the chakat and it. Saga instead of saying magana 100,000, but if you put into those into consideration, a profit in your salary 10,000. So we are now being taxed at what? 10,000. But when this everything is under Nyarai on those name, should be taxed for 100,000 here. You get it? So that's the difference. That's why so many people are crying. Because they know they don't have that financial literacy, intelligence to say, okay, where do we put, how do we have reduced our tax liability? Like I said, you cannot avoid, but you can only reduce legally. You see, and now for people, those people to now say are now moving that property from Nyarai or those name to what Nyarai Private Limited. There's a capital gains because you are now transferred. They look at, okay, you bought these things at 10,000. Now the current value is say 50,000. So there's a capital gain. You are now going to pay tax. But otherwise, people that have got properties that are in their not in their personal names, they are not worried. All mutuals in the properties. Have you ever heard all mutual complain with, no, you have to introduce this tax? Why? Because it's not tax. Because they are taking the legal persona, not this natural person. Then there's capital gains. Like I mentioned, a property that you bought it for 10,000 and you're now selling it for 50,000. That capital gain, they will tax on that. But there are also there are some, you look at costs over time, but probably did renovations, there's some inflation allowance, and therefore that 40,000 probably not to take up on very 5,000. So then if you are making more money, but what about that tax? Again, like I said, when you're an individual who takes over 40,000, almost 40%, 60%, but 80%, that takes out 20%, or sometimes nothing. Bosanians are no packet to a loss. And then there's royalty income for those that are like that. I encourage you to write books because they become passive income. Can I just go take some royalties? Your book, they're going to take some Panama royalty. So whatever ideas that we have, let's put them in a book. That income will help you. As you grow old, just passing it. I was reading recently Donald Trump Jr. Was it 1.5 million? And for a book in which he wrote nothing. He just took a collection of what? Of letters. Then he put it in a book. Then people started buying. But then I got to see, I got about royalties. Right. The next thing, okay, we are now moving into the fundamental components of financial literacy. We talked about budgeting. Budgeting simple is what? Is a plan of telling your money where to go. That's a simple definition I can say. It's a plan of telling your money where to go. I want my money to go to fuel. I want $100 to go to fuel, $10 to go to lunch, $50 to this. Yeah, just simply telling your money where to go. Not otherwise, to do it otherwise you separate. And we are following a systematic plan to say, I want money to, because there are four categories. They say, okay, this is for spending. You're looking for your groceries, all other items. You decide, okay, you list your items. I know it's very difficult sometimes to say, okay, I want to say $100, I want to say it for groceries. Then you do your grocery, you put in your prices, it comes $200. It's okay, just do, this is a first draft. Then investing, I want to think I want to invest, I want to go and buy a share, or I want to go and invest in, say, when you do network marketing, you can buy my products and it will set a value. From say, for example, $100. Then saving, so I want to save, say $200. You put your wish list, and then I want to give something to some people. Also, to my parents, I want to send say $100 or $50. Then you come up with your bill, say it comes say $800, but it's $300 but you can now start to adjust. Okay, where do I adjust? Probably spending, you can reduce this thing, investing, maybe look because it's for the future saving. Because when you are saving, you are looking for at least again some emergencies can come up. You should have something to use for that emergency. So you need to take time to know what we do this. These are the expense items that we go through. This is I need to be investing because tomorrow will come. I need to leave a legacy for my children. I need to take my children to university. But the reason why most of the times that when schools open, when it's exam time, we come under pressure because these things, like, we know them, they'll be coming, but we don't have what? We don't have a deliberate move to set aside some funds for those items and eating. So again, when you are doing your budget, I know most of us, in America, they say 66% of Americans, they are in debt. I don't know in Zimbabwe. Probably it's higher. But you see, when 66% of the population is borrowing, 34%, which means they are borrowing from what? From this 34%. So it's good to be on the other side. And you should have a way, if you're in debt, you have a plan to say, I want to reduce my debt. Are we following? Am I still not too fast? I'm okay. All right. Then when we come to number 2 is investing. We all want to invest. But let me not forget to mention this. These days there are so many products that have come through even social media and Facebook that seem like they are investments, yet they are pyramid schemes. Because when you look at an investment, say if you invest $100 in 24 hours or in 48 hours, it will be $500. You have been in business. I don't know if you have ever done that. Matengesa profit, shoot 200%. So you should be aware of those things, because when you are investing, you should look at the interest rate. Is this investment you are looking to? Okay, I've put in my $100. They're saying 10% per month. Is it per month here? Is it per annum here? Is it per week here? Again, people research is just but when we borrow, we don't read the fine lines. It's only 10% per week. I'm going to give you 10% what? Per week. 40%. So you should understand those things with interest. You are paying interest. At a rate of 10% per week and per month, per annum. So both sides, we are comparing my investment with this investment, say 20%. If I put in money, if I sell, I'm going to $10. But if I go and buy this item, I sell the products, it's going to give me $50. You choose, and you are making comparisons. Then you should also look at price levels. Because price, you are looking at the price level generally in the economy, where the price is going. Like in our situation, we're in an inflationary environment, no prices are going up. I sell to you, say, on credit, most of the after 30 days, the $5. Then that product, after that product is now $15. But I'm going to collect from you $5. I've what? I've lost a little. So you should understand where prices are going. Whether I choose to COD. If you are selling product on credit, which means can I credit, which means to say $10. But cash is what? $5. To compensate what? Loss of value. And you should only investing, you should also look at diversification. And I'm happy I do a lot of things. When you are doing a lot of things, make sure you're not doing a lot of things in the same what? Sector. And like that gentleman says, I do road runners, and I was Panama types of road runners, and but that's not diversification that we are talking about. If he's doing road runners and then Kumwe, only I would say he's doing a water business. Then another side went down to see Mabel. These are different what sectors. What's going to say? Probably people will buy water. People will buy what? Clothing. That's the diversification that we are talking about. When you are investing, look at what my companies are always summary, they're in different sectors. Go so that when another sector is hit, another sector is up. Then also risk, I think we have got insurance guys here, they will talk more about that, risk mitigation. You should look at the risk of this thing going down. Shakamira say you should analyze the risk, your risk levels, Shakamira say. And then there's also when you are investing, this about my indices, when people that are familiar with stock market, they are what they call indices. Like the mining index, we can say to the mining, I want to invest in people that are in companies that are in mining. And then kuna na America, kuna na S&P 500, count S&P 1000, which is the top 1000 companies, which means when you put money into that index, you track the top 500 companies. And which means you are tracking the performance. What you should understand is the history and the current and the future prospects of whatever you are looking at. You should not only look at the history and the current, but look at the prospects. Where is this company going? Like in Zimbabwe, Zimbabwe, but there are some people that are seeing opportunities in that environment that other people are saying it is about Shoma. Which means some people are saying, okay, I think in this environment I can introduce this. There's this term, low-hanging fruit. This is a young low-hanging fruit, and people start moving into that. You should see where should I take my products. For example, people can be they want a product, but your product might be priced high, but try to unbundle it. For example, Cascade. Do you know Panamas or Cascade? Do you know what Pagatanga that thing was 500 mils? But because of the quality of that product versus other competing products, they are priced that people were willing to pay for 500 mil. We will make a loss if we continue to pay this as 500. They reduced by 100 mils and the still people will buy. Get what I'm saying? You should look at that. Then number 3. Is borrowing. I think I've touched a bit about borrowing. So what you should do, what I can say more about when you borrow, understand the terms, the interest rates and it. When you miss an installment, there's the agreement say, okay, you pay interest upon interest. And it, $100, manfano badara 10 papera mwezi. Makundikana. So they say to now maku badara interest on 110 times what interest rate. You should not be compounding effect. And also when you are investing with Zol, understand they are saying is it going to be compounding? Because if you put in $100, which are 110 and it, are they going to pay you interest on 110? Interest on $100. You should be able to understand those dynamics. I remember there's a time when a visitor went to get some money from a certain financial institution, but because we said, I just want this money to supply this order and pay it before the 30 days. The apostle said, okay, it's 30 days, but I managed to negotiate, and I will pay you this money in, say, between 15 days. Can I not pay to calculate an interest on the number of days that I've held your money? And they agreed. So when you should also be able to negotiate. I'm going to know yes, but negotiate to reduce your cost of funding. Then there's also the time value of money. We know that the dollar today is not worth as time the dollar tomorrow. So understand those aspects of what time value of money would be. When I give you my money today, you're saying you're going to pay me after a year. You should be able to get, if you don't understand about how to calculate these things, you can consult, okay, I want this investment, to put it in this period. Is it okay? Can you calculate for me after a year, Mariangu inenga mirase? If I put in this, they will calculate and tell Mariangu $100, Panopera Gore inenga $200. Okay, right? You go and compare another one. After 1 year, Mariako ipamene gononga $300. Then you choose. It's not about looking for Kune Mariaka one, but you are looking at the risk as well. kunobhadhara kune $300 they might be kune lucrative but the risk will be high versus what $200 but the risk will be low. So we look at, okay, are you willing to take the higher risk here? Are you willing to what to go on the conservative side? I will not talk about loan structure. These are the terms and repayment periods, monthly or what. I just want to move with time. Then there's issue of taxation. Under taxation, how the tax system is structured in every country is they always structure it so that at least it goes, one, it benefits the rich. That's number one. Because they are the providers of the money. And also number two, the government, they structure the tax system to be able to support their programs. So whatever you are doing, you should, when you talk about budget pipeline, you should listen to what is the government trying to achieve in this fiscal year of 2024. Are they going to more of roads area? Are they going to doing more energy area? And then if you look at people, companies that invest in those government, you see the tax my benefits. I only watch what talking about the tax holiday. This company, if you are going to be investing in this, instead of saying paying 25% on your profits, government is saying will pay 5%. And then which means we are in the same industry. I mean, modern business messy. This one is now up to a tax holiday. I'm going to say 0% for the next 5 years. But because we are investing where the government, government, but at particular time, you paying tax at the gazetted rate, because income tax is tax on profits that you make as a company, which is 25% plus that AIDS levy, shingle report, which means it comes to 25.75. Then pay as you earn, we talked about, that is tax on what, on your income. It ranges from 0 to 40%. And if you check on my channel, there's a channel, YouTube channel, Yagan's Financial Apostle. I did a video on pay as you earn, explaining how this works. But you find the difference that because when you're under pay as you earn, you tax first before you spend. But companies, they spend and then get taxed. So if they spend, it's just, not just spending, but when you are spending, business expenses are what are allowable deductions. So the technicality was okay, how do I make this expense a business expense so that it becomes deductible in my financial statements and And then there's capital gains tax. Yes, you have bought a house, you have bought even a car. When you are selling it, they look at capital gains. Okay, the car you bought it at $1,000. You know, it's important again. Keep your receipts, agreements, so that you can just say that this is what I paid. This is the agreement. This is the receipt. Receipt. I bought this thing at this value. And if you are making any improvement, keep all your receipts so that there's a time when you need to meet the taxman. Prove to us that okay, you spent 100,000 on renovating this house. But we know that most people in this country, people usually spend 20,000. But tell us why you spent 100,000. No, in my case, I imported whatever mukwas from somewhere. You look at this, my house is different. It's a house in a Hatfield, but it's different. Okay, they look at those expenses, then they approve them, then they calculate tax or not. Saga tax $100. Then there's withholding tax. I think most people have encountered issue when you don't have a tax clearance, you get 30% withholding tax but that tax will not be final because you know what I say. You know what okay, mambo bado 30%. They now it's just go toro yango toro bita but what okay mimi kana mambo papa ne VAT para VAT waruida kana pada income tax waruida papa but wagara pane yambo enda ya nditi. So you should understand these dynamics of taxation. I know today there's not much time to explain much about that. Then number 5 is the personal financial management aspect, whereby as business people we should be able to separate maimrewa ne and Charles Gio Christian Gio executive and it maimrewa and Christian Gio executive they are different and it yes ma'am. Okay, the animal presumptive tax, what they do, what that means, presumptive, they are assuming that people, they've characterized people that are in saloon, maybe in transport, they assume kuti kana wakaita study yavo vasuma kuti let me use makombi panotime wetanzi kombi inobhadhara unogona kesha $100 a day handiti, then they calculate okay inenge isafire mari vanoti pamwe $12 handiti, saka they assume kuti, which means per quarter, this is for people that don't want to produce any records. Some people thought yes, aka 9,000 akati ini andotita more handiti. So to some people, they, by the time when, because of our inflationary environment in Zimbabwe, those figures, they became meaningless. But when you are now working with a stable currency, you see those figures, no one wants to be in the presumptive. So you should rather register for what? For corporate tax, income tax, whereby you state your business, your revenues, your income, you are able to separate your expenses, then you are allowed in business. There's some companies, I think when they vessel, they know that they will be making losses for the next 10 years. Because I bought this capital equipment which because I just kuta productive after about 10 years. The government allow that, but they know they will be getting my way from the pay as you earn. Because my engineer, from chapter 5,000, they will take 40%. My chief executive, I know 10,000, 15,000, they know that they will get 40% year papa. But it's not what they will be not something. But and takes holiday. I'm going to put my losses. I hope you get it. Thank you. So the personal financial management, like I was saying, you should number one thing is you should be able to separate your personal expenses with business expenses. And also like we said, the business can also do a budget, it also invest, can also borrow and pay tax, the same as an individual. The fortunate part at the moment, our tax system is not yet encompassing everyone. I think people that have been to outside the country, America, UK, they know that they will know that Nyarai in 2023 I get 100,000. Then they see to declare to get 20,000. One takes on our 80,000. They will know, but that time is coming. So it means let's try to set up a personal commanding. But can also end up say yes, that man will come. But when we are doing other activities, do them under a business, so that you can reduce your tax payable. And then under personal, you should balance also with your personal expenses. You are putting aside money for investing, for saving, and then if you have loans, I think in one of declare bankrupt and illiquid, and I'm insolvent because of too many debts. So you should also reduce borrowing. But if you happen to have loans, but understand my interest. Even if when you go to buy clothes on credit, I don't think most of, and I remember when we share better credit with 8 gas, we never really wanted to understand what interest I do, but I marry. So installment, I'm going to get married without one, I can afford it. And you remember also with Bible on the buying power has been increased, and it encouraging you what to borrow, but it also came with what increased what interest. So you should know your limit. So that it was at the end of the day, these things, because you never guys are your signature, you have committed yourself. And the mama, I don't know kind of future must stop orders, but I know in any such as question, go carry my butter. And one day you'll be surprised, Kutichi, there's nothing at the bank, but I got to pay them down. So it's important to understand these fundamentals. Your budget, because you budget, you start, just start from recording your expenses on a daily basis. You sit down as a husband and wife, Nasma, how did you spend your money? So that you know, Is it per week, per month? We are able to plan it, okay, so if this is our budget, assuming things have remained the same, prices have not increased, which means you know that Isusu, our household expenditure every month is $200. It happens, so happens, but now you get $1,000. You don't need to increase your expenses. Garambari by $200. And then this $800, you're looking at it, I'm saving so much, I'm putting money on my investment. Then slowly we can come out of of this quadrant here. We want to go on the right side of the quadrant, not the left-hand side. And it, right, the next item that I want to talk about is what are the benefits of financial literacy? There are many there. Ability to make better financial decisions. I think I've mentioned about interest. Look at, you are comparing investments. You are now making choices. I want to invest in A, B, I'll leave C and D because of reasons that we have identified and listed down. Then you are equipped to reach your financial goals. Like if you have put down, okay, I want to save, say by 5 years, now down with 150,000 and it. In that example, we have said that we are now might as well say $800. Saka, we have got a goal of reaching 50,000. So we're now saying 50,000 over 5 years, which means per month, how much are we going to be setting aside? Saka, if you have got an increase, you see that probably your 50,000 goal, you can reach it in 3 years or 4 years. Which means you are then you're able to manage your money better, you're able to service your debts, and you are coming out of debt quickly. There's less financial stress because you are making your decisions using from an informed position. I'm now looking at I saw Coach Nyari, she was putting in a nice outfit. No, I want to. Then you go and try to but you have to visit your budget. Does your budget allow you to do that? Oh yes, you can reach you can get to that outfit, but after probably 6 more months of saving, not immediately. And there's also an increase in ethical decision making when selecting even insurance, like the insurance guys. You are able to compare with the insurance that Champions is going to provide me versus what is provided by XY. You are looking at making better choices. And
So Music Studio.